You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amberdata. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amberdata delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amberdata eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody, that music means we are back. It is Monday. It is 2 p.m. Central. It is 3 p.m. Eastern. It is time once again to talk some crypto. My name, of course, Mark Longo from theoptionsinsider.com, as well as on the network upon which all of you folks have been binging of late. Hope you had a great holiday end of your week last week. Maybe you're out there listening to this as you're doing some cyber weekend shopping out there, hunting for deals. Either way, I hope you're having a good start to your week out there. Not the best start for the crypto markets. We'll get there in a little bit. Of course, if you want to check out anything you missed on the network, make sure you're subscribed to the full network wherever you get your favorite podcasts. And of course, if you want to join us for awesome pro Q&As, which do delve into crypto quite a bit, as well as, of course, options oddities and all sorts of other fun, I do have it on good authority. We will have a Vol Deathmatch 2.0 coming up soon. We just need to agree upon a time with the participants. Only place you can get that, theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on this Blood Red Monday out there on the crypto side of the fence, and indeed on the broad equity markets. I am joined once again by our good buddy, Mr. Greg Magadini from Amberdata. Mr. Greg, welcome back to the Crypto Rundown, sir. How was your Thanksgiving holiday?
Thanks, Mark. Happy to be here. Good Thanksgiving. Did a little bit of a road trip, explored some of northern Idaho. It was pretty interesting. And now I'm back home and just checking out the markets and seeing this mega sell-off on the back of Japan BOJ hawkishness. Very interesting.
Yeah, a lot of wild stuff. Speaking of wild stuff, our audience couldn't make up their minds last week, Mr. Greg. So you get to be the ultimate arbiter on the ultimate Thanksgiving question of our time. We had a debate last week on the network whether cranberry sauce is a topping or an actual side dish. Our poll came down exactly 50-50, sir. So you get to be the ultimate decider. Is it a side dish or is it just a topping?
Definitely a topping.
Aha, yes.
Just a dry turkey topping.
That's what it is. You don't eat a bowl of cranberry sauce by itself. You'll eat mashed potatoes. You'll eat, stuffing by itself in a bowl. You're not going to eat, unless you really like cranberries, I suppose. It's like gravy. You put it on something else, right? So there you go. Greg has decided we are now 50.01% for it's just a topping, listeners. Meanwhile, there's a lot going on in the world of crypto, so let's get to it with the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we do just that. We break down all the action in the world's biggest crypto dog out there, aka good old BTC, looking a little bit lighter this time than it did on the show a week ago. Coming in and start the show, we were a little bit shy of the 85K level, 84,874 to be precise. That puts us down almost 4,000 handles, about 3,800 from the level we were hanging out last week, right around 88,682. As we have commenced the show, we have ticked back north of 85K, so maybe things turning around a little bit out there for the bulls out there. Of course, it's been an interesting time. We saw a lot of blood red on the screen last week in the early part of the week. Then it seemed like things had mitigated second half of the week. The equity markets got the bit in their teeth, started rallying, Bitcoin following suit. Maybe the concerns were overdone, and then right back at it right after the holiday, bam, blood red screens yet again. Mr. Greg, what are your thoughts on yet another turn to the dark side in BTC, sir?
So I think one of the things that it's really interesting to keep in mind is a lot of this seems to be driven by the macro monetary environment. So last week we had on November 21st, we had the New York Fed governor come out a little bit more dovish than the market expected. He was saying that on balance, it's probably better to cut than it is to not cut in the December 10th meeting. So that set markets rallying on Friday and then all of last week, which is kind of the holiday week, which is typically kind of a bullish week anyways. Markets are thin. There's not a lot of people unloading paper during the Thanksgiving week. And so we had a catalyst and we had just kind of a rally all week. So that made a lot of sense. Monetary easing, dovishness from the US. And then today we have sort of hawkishness from the Bank of Japan, which essentially had about 20% probability of a rate hike for December 19th. Now something like 82% probability for a rate hike in the front end for December 19th. And why do we care about Japan? Well, Japan is still the biggest buyer of US treasuries. So if there's hawkishness in the Japanese markets, then theoretically that kind of translates out to the US treasury markets. And so what I think is happening is we had a dovish catalyst last week, and then we got a reversal hawkish catalyst this week, and Bitcoin's just kind of swinging around in response to that. One thing that's interesting to keep in mind, though, is that divergence, like we're seeing divergences between Bitcoin and precious metals. So silver is going haywire right now, something like $59 an ounce. And then gold is still, headed back towards all-time highs, which was around 4,400 an ounce, and that right now is around 4,275, something like that. So I think the big picture in terms of precious metals is still a trend higher, but in terms of easy money, risk assets, and somewhat related to Bitcoin, we're kind of being swung back and forth here on monetary policy.
I know you've been a subscriber for a while of Bitcoin as that digital gold, sir. Has this little bit of decoupling with the major shiny stuff, has that changed your tune at all, sir?
So I do think this is very interesting. So the debasement trade for Bitcoin or hard assets, commodities, all that good stuff, I think all those fundamental developments we're seeing right now are bullish for the debasement trade. But I just wonder if some sort of bond market shakiness, even though long term that might be bullish on a debasement, on a debasement trade, in the short term, or while there's a quote unquote bond crisis, so to speak, that's kind of a very risk off environment, and who knows how to price things environment. And so I wouldn't be surprised that markets go haywire and prices trade quite a big range for assets like Bitcoin to have no, long-term precedent. We've had Bitcoin for 15 years here, so it'll be hard to know what the price of that is. But that being said, any sort of bond crisis probably causes the central banks to respond with some sort of market support, which supports the debasement trade, which long term is very bullish for Bitcoin. So I think there's going to be great spots to pick. The trick is the path along that way. And so one of the things that I do think is interesting is that there's volatility plays to capture some upside. If we do get the upside, well, foregoing the downside if we get more downside. So there'll be some great plays to be done here.
Speaking of vol, let's break it all down this week, listeners. Remember, if you want to play along with the home game, Amberdata is the place to go to kick the tires and light the fires. You have literally no excuse, listeners. The GUI is now free out there, so you folks can kick the tires and light the fires on all the stuff we talk about here on the show, and a whole bunch more we don't have time to get to on the show. We really just do scratch the surface here, listeners. If you fired up that GUI right now, you'd see the weekly vol in Bitcoin looking a little bit spicier, which I think you would expect given all the tumult we're seeing out there right now, but not a ton. At about a 55 when we kicked off the show. It was a tick shy of 50 in the last show, so up a little over 5, about 5.5 points out there on the Bitcoin 7-day vol front, listeners. Going out to the more standardized vol metric, 30-day vol, we were at about a 50.85 on the show last week. About a 50.5 coming in this week, so not a huge evolution there, which is kind of interesting, maybe a little surprising. And then going out to where the hodlers are hanging out, the 6-month vol, we were a little bit north of a 50 on the last show, about 50 and a third, coming down slightly, down to about 49 and 2/3. So coming in about 2/3 of a point. But again, not a huge evolution there. Greg, are you surprised we're not seeing maybe more reaction on the Bitcoin vol front this week, sir?
So I think, Bitcoin vol has been, since we dropped from 120 down to the 80 handles, Bitcoin vol got bid pretty hard. So we were hanging around like 35 and now we're around the 50 level. I think really it's essentially priced pretty high, relatively speaking, to the past couple years here. And so I think a lot of this move in the vol market's been priced in, unless we get kind of a break below into new all-time lows. I think markets probably consolidate in the 80 handles and vol comes down. There's also a good argument to be made that we're going to get some sort of year-end rally relief, especially going into December rate cuts from the US here. And if we get any sort of relief bounce, spot vol correlation is very negative right now. So spot bounces, vol's going to come down a lot. And we could get back into the high 30 handles, low 40s. So I think there's a good argument to be made here that, if you want to own some upside, you could do some 1x2s or some call spreads. If you want to fade a lot of this vol move and get some sort of bet on spot vol correlation continuing to be negative.
Let's head out to the Skew, shall we, listeners? You expect it to dip into the negative when we're seeing all this blood red on the screen, and that is the case. We were at about -5.25 on the weekly vol last week, down to about 8 1/3, so a little over 3 points to the downside. Then again, if we rack that right now, probably be a different story now that we've rallied back above 85,000 at least to start the show. That weekly vol tends to fluctuate wildly, listeners. Going out to the 30-day vol, though, a little bit more, like we said, more stable, standardized metric out there. Was a -5.3 on the show last week, almost a -7.3 this week, -7.25. So tilting a little bit more to the dark side out there. And then where the hodlers hang out, this is something Greg and I have been talking about for a while out there. Used to be positive skew since time immemorial in Bitcoin options. That is all gone. It was -3.15 on the show last week, -4.15 when we kicked off the show this week. So that continues to show, at least for now, the longer term 6-month and beyond bias is clearly hanging out in the puts. Mr. Greg, what are your thoughts on what we're seeing out there on the Bitcoin skew front this week, sir?
Yeah, Skew is pretty panicked here in terms of what we've seen earlier this year. So it's really kind of around the levels of the Liberation Day, the April mega sell-off we got across risk assets on the back of the global trade tariffs. So Bitcoin put skew is kind of hanging out near these levels. I think that might be a little overextended, especially given the context of April of this year. And if we look at the rest of risk assets, tech stocks, overall S&P 500, also just the bond markets are a lot more stable. I think we're getting like a basis trade unwind in the bond markets back then in April. So there's a lot less reasons for risk assets to be so negative. and Bitcoin's kind of leading the way in terms of the volatility surface here. So I kind of think there's a potential fade here in terms of the skew on Bitcoin. It's a nice little opportunity, especially if you are looking to buy the dip, so to speak. Might as well capture some of that vol premium that's being bid out to the puts.
Now, Mr. Greg, a lot of people have been spooked on the back of this potential unwind, of course, of this Bitcoin treasury trade. We're seeing our old buddy, the monster MSTR, getting shellacked again today. They've kind of been leading this trade down. They were leading it up. They're leading it right back down the other way. Some folks are spooked that maybe we could have some more liquidations in the future that could drive Bitcoin lower, hence that skew we were just talking about. But it sounds like if you want to fade the skew, you're not buying that argument, sir. You're not concerned about some future liquidations maybe carrying us lower in good old BTC.
Yeah, that's a great point. I mean, I think the digital asset treasury sort of unwind is definitely a real risk. For that type of trade, however, I'm more interested in shorting Bitcoin or maybe some of the other altcoins that have digital asset treasuries, just because all those latecomers to the digital asset treasury trade are pretty much all underwater on those acquisitions. MicroStrategy is still in the green. I do think MicroStrategy has more staying power for a lot of their holdings. It sounds like they're going to be able to secure dividends for the next year using just equity sales of the shares. So I'm not quite as worried right now that MicroStrategy is going to sell Bitcoin. I think they're going to put up a fight before they do that. And right now, I think the market's kind of overly enthusiastic or overly panicked that they're going to sell some of those Bitcoins. I think the other digital asset treasuries like Ethereum or Sui or Solana, those ones are more likely to be sold by DATs.
Interesting stuff. We'll get to all that in a little bit in the altcoin universe, listeners. Before we get there, let's wrap up the Bitcoin breakdowns of some of the products you folks like to sling some Bitcoin and some Bitcoin clearly on the options front. IBIT, you folks can't get enough of IBIT on the options front. That ADV is over 1 million contracts now, 1.06 million, up about 5,000. At this point, I think the argument is kind of gone that Deribit used to be the 800-pound gorilla in the Bitcoin options world. Clearly, IBIT looking to steal that throne out there right now. It was at 48 and a third when we kicked off the show, down about 2 points. Has ticked up a little bit up to about 48 and a half as we kicked off the show. So down a little bit less than 2 points out there right now. Putting up nearly 1 million contracts already today. 970,000 contracts on the tape, listeners. So again, another banger out there in IBIT. Any product that can put up 1 million contracts a day consistently is serious business. You have to pay attention, listeners. The vol out there hanging out at a 52, which is unchanged on the week, which is kind of interesting. And if you're wondering out there, what is the hot option changing hands in IBIT today? It's the 50s. The 50s expiring at the end of this week on the 5th have changed hands 25,000 times for about 58 cents, listeners. So if you like to roll the bones on a little bit of near-term upside, maybe you believe what Greg's saying, there's going to be a little bit of a turnaround. Maybe you think it's coming this week, in which case maybe you think those 50s are a cheap trade. We also have about almost 25,000 of the doubles. The 55s going up for 41 cents. Those could potentially be closing, so we could have a little bit of roll action here as well, rolling about 25,000 of the 55s down to the 50s. Either way, a lot of interesting upside out here. Greg, the 50s and IBIT for about 58 cents. Does that float your boat? And anything else catching your eye out there in the world of IBIT? And do you also agree with that statement that it seems like IBIT's starting to be the 800-pound gorilla in the room, sir?
Yes. Okay, so couple things to take here point by point. So starting from the back end of the questions, yes, I do think IBIT's going to be the 800-pound gorilla. If we look at the open interest on IBIT options versus Deribit, right now they're about neck and neck, but IBIT open interest has increased about 400% since July of this year. So it's growing extremely fast. The rate of growth in IBIT open interest and volumes surpasses Deribit for Bitcoin options. Big fan of Deribit, of course. Forever a fan of Deribit, but happy to see the crypto vol space growing. So that's cool. In terms of the 50s end of week for 58 cents, I think if you're trading the call side or the put side for those 58 cent, well, the puts, I guess, are way into money right now. But if you're playing the upside for 58 cents, I think both of those get paid. I think we have some swings here throughout the week. So if you want to buy the call side, I think that gets paid. If we're above 50 and you can buy the put for 58 cents, I think that gets paid as well. So I think there's probably some good trades there in the short term. In terms of what was the last question? Actually, I don't remember if there's one more question there.
I think you hit them all there with
cool.
the Deribit and IBIT. And you're right, Deribit brought a lot of us to the dance, so we got to like it. But IBIT definitely one you have to pay attention to now. One you're always paying attention to, Greg. We only talk about it when you're on the show because you love this product. It's MSTU. This one, I think, only puts are paying, I should say, for the foreseeable future, Mr. Greg. Trading a whopping $1 as we're kicking off the show. Still putting up 50,000 contracts a day, though. So there's still more than a few degens out here who love their MSTU, Greg. Putting up 48,000 contracts today. By the way, if you're wondering, it's about 3,000 of the one puts that are leading the dance out there today. So if you want to take a flyer on MSTU, continuing its march to zero, it's going to cost you a dime this week. I don't know, Mr. Greg, are you still playing an MSTU? For folks who are hoping for a little bit of a meatier product to sink their teeth into, is there any hope that they do the old, UVIX reverse split trade, or this thing just going to keep going to oblivion pretty much?
So in terms of MSTU, I think the trade that I've loved has played out pretty nicely. That thing just is meant to decay. You have the tracking error in a high vol asset, and MicroStrategy's been trending down. So if I look back to 6 weeks ago, around October 7th, MSTU was trading about $6, and now it's trading $1. So call it down 85% ish. That thing is not going to recover, and the only way the price goes up is through the reverse split. I do think they probably do reverse split it just because there's volume, there's interest in this product, people are trading it, people are trading strategy. So they'll probably reverse split just so people stay engaged, and they've regular split it before, so they're not opposed to splits. But just to contextualize, earlier, exactly 1 year ago, MSTU was $30 post split, and now it's $1. So that thing lost basically 97%. It's doing what it's supposed to do. It's a high vol asset, tracking error. That thing's just gonna decay.
As your buddy, the Rock Lobster would say, it's a predictably crappy asset. And as long as it's predictable, listeners, as long as you know it's coming, it's a good thing. If it's a surprise, if you bought it at 30, maybe not the best trade out there. Speaking of some interesting trades out there, our good buddy Mara has been slinging all over the place, trading $11.50 right now, up actually $0.50. So getting a nice little rally out there. It hit below $10 last week, maybe a little bit longer. Like 9 3/4, I think, is where it bottomed out. I was able to sell the 10 puts for some pretty attractive levels, so I wasn't too mad about that. Coming in this week, again, $11.50, putting up 208,000 contracts out here, so it's been an interesting one. This one has been pretty range-bound for a while, breaking out of that to the downside, obviously, now. So some interesting things out there. Are you still wheeling Mara out here, listeners, or have you moved on to other things? The hot option out there today, about 10,000 of the 12 calls expiring this week. These going up for about 18 cents. So if you think Mara has a little bit more juice, maybe you like these. There is some OI there, so paper could be closing. Then we have the 11s going up about 10,000 times as well for about 51 cents. Maybe have a bit of a call roll, similar volume on the 12s down to the 11s, which certainly would make some sense. And if they paid 51 cents for those right now, they're looking pretty good on that trade. So not a bad one. Greg, have you done any wheeling in Mara, or are you just too busy watching your puts pay off in MSTU, sir?
Selling calls and call spreads in MSTU, not owning puts, unfortunately, because those are priced pretty expensive. Mara, no, I don't pay a lot of attention to Mara. Just one of those things. There's so many crypto related equities and so many altcoins out there that I pick a few that I like, and unfortunately Mara was not one of them.
Not degenerate enough for you, listeners. We'll see if we can find something that is, listeners, as we head on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, listeners, let's get down to business exploring the altcoin universe. Last week, it cost you about 15.3, almost 15.4 billion to break into the top 10. And surprise, surprise, cost you less this week, nearly 2 billion less, about 13.5 billion to break into the top 10. Once again, that gets you to Cardano. So Cardano maintaining its death grip on the number 10 spot, at least for now. Number 9, it's our old pal Doge, 20.25 billion. Number 8, it's Tron. Whatever shine they got off that movie didn't last too long, listeners. 26.1 billion worth of market cap for the number 8 spot. Number 7, it's Solana, 69.5 billion. Number 6, USD coin, 77.25. Number 5, BNB, 112.3. Number 4, it's XRP, just kind of flirting with that 2 handle again. So we'll see if it dips below that again or if it can manage to rally again. 120.75 billion for the number 4 spot. Number 3, it's Tether, 184.6. Number 2, it's ETH. Back to the dark side, 330.8. And the big dog out there looking a little smaller this week, BTC, about 1.7 trillion worth of market cap. All right, out to ETH we go. I know a lot of you have been watching this one. You're a little happy, maybe a little bit relieved the latter half of last week when ETH got back above the 3K level. You thought, okay, maybe the worst is behind us a little bit. Nope. Just a head fake, right back down below 3,000 again. As we kicked off the show, we were at 27.39, puts us down over 200 handles, about 231 handles from where we were this time last week. I'm sure if I re-rack that now, it might be a little bit different here, listeners. Greg, before we get into the skew and the vol and all that fun, you mentioned earlier you think maybe the unwind trade might be a little bit more prominent in all things ETH. What is catching your eye out there as we are back below 3K, sir?
Yeah, so I think altcoins are going to have a harder time here. So the way that I think about it is Strategy had the first digital asset treasury accumulation play, and then other companies tried to do the same, but Bitcoin had already kind of moved a lot. So then other companies went out to the altcoin universe to get ETH or Sui or Solana. And what happens is that they end up getting at higher prices because it came later in the game, but also higher prices on a more volatile asset. So if we look at sort of the biggest holders of ETH digital asset treasuries, their average purchase price is around 3,900, 3,600. That's way underwater. That's 30% underwater on your digital asset treasury holdings. And even if you're not a forced seller, so even if you bought by selling equity as opposed to debt financing, you're also not a buyer. So chances are is that if ETH recovers, it's going to do so without those DATs continuing accumulation. But chances are also that if ETH recovers, they might become sellers and unload a little bit, because anyone who takes 30% heat on their digital asset treasury holdings when they have a lot of exposure, board of directors might not like what management is doing, so to speak. And so that's something to keep in mind. So I think these altcoins are going to have a harder time recovering, whereas Bitcoin, for the most part, the big players are still above water on their holdings. And I think the foundation's a lot more solid for the Bitcoin DATs. So that's kind of the context here in terms of what ETH is doing. I mean, we've had a couple attempts to make new all-time highs while Bitcoin has kind of blasted through all-time highs, unable to do it. I still think ETH is interesting from a developer standpoint, building out decentralized finance, building out decentralized applications. But all that said, I don't think in the near term that's going to be enough to move the market higher.
Yeah, that's a good point about some of these digital asset treasuries in the smaller, the ETHs and the Solanas of the world, because you're right. They may not be liquidating, but they're also probably not loading up the coffers right now. So that could mitigate some upside, at least in the near term. Let's see how that's playing out here on the vol and skew front, shall we, listeners? Out to the vol and ETH land, and we're hanging out not that dissimilar from where we were this time last week. Weekly vol is almost literally unched. We were at a 75 last week, 75 and a third this week. So pretty much the same there. 30-day vol, 74.5 last week. Actually coming in a little bit this week, down to about a 72. So at least for right now, this latest dip below 3K, not spooking folks out there. And to the 6-month vol at about a 73 on the last show, 71.5 this week. Let's roll in some skew out there as well. Not surprisingly, things taking another tilt to the negative. We got about negative 5.3 on the weekly skew last week, negative 8.75 when we kicked off the show. So looking decidedly bearish there. Going out to the 30-day skew, a little over negative 3 on our last show, negative 5.5 this week. So once again, tilting towards the dark side. That kind of 3,000 level seems to be an important psychological level for a lot of people. When we start breaking through it again, you're going to see the skew tick up. We're seeing that on the 180-day skew as well. We were up again to positive a quarter. So we actually had a positive skew last week, right back down to negative 2/3 out there this week. In fact, if you could say anything about ETH skew, it's like we just transposed the levels from 2 weeks ago when we were right in the middle of that sell-off again. Then we rallied last week and went away. Now we're right back to almost those exact same levels again. So, Greg, anything catching your eye in the world of ETH, vol, or skew this week?
In terms of vol, I would say, we have pretty much flattish vol. 75 vol for ETH seems to be kind of the level that things are priced at in equilibrium. If I look at like the realized versus implied differential, it's just kind of on point. There's no like real differential. In the very short term, like 1 day options and 3 day options, if you get the sell off right, vol plays. But for the most part, implied and realized are kind of in line if I'm looking at like 30-day, 60-day, 90-day vol. So that's kind of interesting to me. I would say fair value for the most part. The skew is going to be the game here. Unfortunately, the skew is very price to the put side, and I just think prices go down. So, how do you play that? I think there's good arguments to be made about like, maybe you get your timing on a 1x2 correct. You buy the one near the money, sell two way out of the money. Problem is, if we kind of blow through levels worse than expected, that's not going to be a good position to have on, even though you're kind of capturing a lot of that skew to your favor. But that's just something to keep in mind. I think I'm more interested in the deltas here. I think the delta is more of a clear picture, and I'd rather just be short ETH at these levels.
Just ride some deltas to the downside.
Yep.
If you're riding some of these other names in the altcoin universe this week to the downside, you might have some interesting outlooks. A good old BMNR was down, is still down. Actually, we're kicking off the show here. Down to about a 29.5, down about 2/3 of a point. Looks like it's gaining some of that back now, as we've been talking on the show. Still putting up some decent numbers. About 250,000 contracts is the ADV, up about 4,000 from where it was this time last week. Today, putting up about 220,000, so it seems like it's on track to hit that. A 30-day vol ticking up, though, getting spicy, up to about 110 from up about 14 points from where it was this time last week. And then, of course, Greg's beloved Circle. Been quite the odyssey on this one over the last couple of weeks. Sold off to, I believe, somewhere around the 64 level a week and a half ago or so. Been on the upswing ever since. Was at 76.25 when we kicked off the show today. It puts it up nearly 4 points, about 3.75 points from where it was on the show last week. Putting up some volume out there as well. 156,000 contracts. That is the ADV. It's up about 1,000. Doesn't seem like it's going to get there today. Only about 80,000 on the tape today. And that vol hanging out right around the 79.80 level as well, pretty much unchanged on the week. If you're wondering, listeners, what is leading the dance out there on a kind of light day in Circle today, it's the 63 puts going up about 4,200 times. Looks like paper's selling them for about 11 cents. So maybe taking advantage of what Greg's been saying for a while. Maybe they think there's a nice little bounce here and they want to sell some puts. Greg, you had a wild roller coaster going on in Circle since the last time we chatted, sir. You maybe were sweating a little on those March, what was it, 45 puts before we turned around. What were your thoughts on all this drama in Circle of late, sir?
Yeah, well, I'm writing this position fully cash secured, but basically the next position I've been rolling into is sell the 45 2 years out, and then use that to buy the 100 to 230 2 years out. So basically risking 45 points to make 130 points. And that trades close to even. I think it's trading a few bucks here now. But I like that position because I don't mind owning Circle. I still think like this is an interesting crypto play in the sense that it's broader than just blockchain technology. Bitcoin could kind of go out, or ETH could go out, or something like that. But I think blockchain dollars or internet US dollars is a real thing. Now, obviously, there's a lot of competition coming online. Stripe has its own thing, its own blockchain Tempo. Klarna is going to be launching its own USD coin. Then we have Tether as a competitor. Then we have, JP Morgan coin potentially becoming a competitor. So I think the competitive landscape is something to keep an eye on. And then also the rates landscape is something to keep an eye on for Circle. But that being said, this story is not over. The Circle story is not over, in my opinion. But who knows? That's just my bias.
I didn't realize you're going out that far with that risk averse. I thought it was March. I didn't realize it was March of 2 years. So you're drawing a long-term line in the sand there. Interesting stuff out there in Circle. Are you down with a little bit of Circle right now, listeners? Are you loading up? Are you selling puts? Are you buying calls? Are you staying the hell away? Hit us up. Let us know. Let's run through a few of the others here in the altcoin universe. Let's go out to Greg's other size holding, ETHZilla. Continues to fall off a cliff. 935, down about a point from where it was this time last week. Solana also giving up all of its gains from last week, back down to right around that 125 level, 124 and a quarter. So I guess the good news, I've said it before, if some of you were lamenting in our chat when Solana had a nice run back above 200, you missed it at the 125 level. Well, if that's you, then maybe you like it here again. There you go. You got a second chance at the apple. XRP back to about $2 again, 201 when we kicked off the show. Down from about 2.25 last week. It's not a great week for XRP either. Wherever she is, Bill's wife is quite sad right now. A Dogecoin 15 and a third on the show last week, 13 and a third this week. So down a whopping 2 cents. Litecoin 86.50 last week, 75.90 this week, down over 10 handles, about 10.60. So they're coming for Litecoin. A Cardano 42, almost 43 cents last week, about 37, almost 38 cents this week, so down about a nickel. Polkadot 236 on the show last week, $2 exactly, kicking off the show today, so down 36 cents. And everyone's beloved Shiba Inu, 1,000,000 zeros, 8.3 last week. This week, 1,000,000 zeros, 7.9. So once again, unfortunately, all of you out there on Shiba Lambo watch, not going to be this week, I don't think. Greg, anything else catching your eye in the altcoin universe this week?
Joel, just to clear the record, I am a Circle fan. I do not own any ETHZilla.
You don't have to lie to us, Greg. You own all the ETHZilla.
Nor have I ever owned any ETHZilla. But Circle, yes, it is a size holding. I do admit that. In terms of other things catching my eye, I definitely think Solana still has competitive juices compared to Ethereum going forward. I don't think the Solana story is over. The market cap is a fraction of the Ethereum market cap. Any sort of competitive advantage in terms of development on Solana's blockchain as opposed to ETH's blockchain, I think is an interesting angle. And obviously Solana has ETFs, it has options, it has all that good stuff. So that's something to keep in mind. I think we could see another run higher at some point in the Solana ecosystem, especially if the markets turn around and we could see some outperformance in Solana. So that's something I'm keeping an eye on. I think that'll be an interesting play going forward.
And we're always keeping an eye on your questions, so let's get out of here with a few of those.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the crypto questions. I saw this question come by earlier when we were talking. Greg, if you want to send a question in via the live chat, head on over to theoptionsinsider.com/pro. Not only can you listen live to the show, but you can ask questions during the show. This one came in from Mr. Nichols. He wants to know a quick question for the show. Do you guys stake your crypto? And for me, the answer is pretty easy and pretty straightforward. The answer is yes. If I have a spot hanging out on different platforms, which I do quite a bit, and I'm not going to do much with it in the near future, I'm not planning to sling it intraday or anything like that, then I will certainly take advantage of staking, especially if it's going to be on that platform for a little bit. It's an income stream that is offered to you by the platforms. You'd be foolish not to take advantage of it. The downside is it's not really for slipping in and out of positions because it's laborious, it's time consuming, and also not cheap. And depending on the platform you're doing it on, they tend to hit you with some back end staking fees that are kind of onerous. So once you stake it, you're going to want to keep it there for a little bit. I'm sure that's probably part of the incentive behind the fees. They want to keep you staked up for a little bit. But that said, if I do have spot lingering around on various platforms, I will certainly stake it. That goes for ETH. That goes for Solana in particular. But Mr. Greg, are you a big fan of staking out there? Yay or nay, sir?
So I think I definitely agree with your answer. I think for me personally, I have some, call it physical crypto that I keep on a hardware wallet. I don't really keep anything on exchanges. I'm too paranoid. But most of my holdings are, ETF based, where I can trade the options and things like that. And so staking isn't an option there. I do think, staking is very interesting, and some platforms make it easy. Even hardware wallets, I believe you can do it pretty easily. But there's a trade-off there. There's a couple things in terms of, like you said, how quickly do you want to unstake? Sometimes there's cooling periods, things like that. And then also, if you are self-custodying your assets, staking is typically a little bit cumbersome. So a lot of people, what they'll do is they'll buy, staked ETH or ETH that's already kind of in a wrapper that has an implicit yield from staking to it. That's just very simple. You just own the asset and you essentially get the staking yield. And then we're pretty close to staking ETFs. So that'll also solve that problem. So I think in the future, it's not even going to be an issue. It'll just kind of be done automatically. As of right now, for me, with my hardware wallet, I don't bother. The holdings are not significant enough to make a difference.
Yeah, there's a lot of caveats there, as you pointed out. If you're paranoid, and certainly you've had no shortage of reasons not to be paranoid in the crypto space out there, and you want to keep it off exchange, that makes it a little challenging to stake it. And of course, as I mentioned, the fees, the turnaround time. There's a lot of reasons why you may not want to stake it, listeners. And as Greg pointed out, we are hopefully getting more staked ETFs coming down the road. So that should eliminate a lot of this problem for a lot of people. They won't have to worry about whether or not to go through the hassle and the expense of staking, because they'll have an ETF that will hopefully do it for you. Hopefully, a lot of hopefullys in there at a somewhat modest fee. We're seeing some of the fees, some of these early products, maybe a little bit high. So hopefully we'll get modest fees. You get to stake. It's all in one nice, easy wrapper. You could park it in a securities account and live to fight another day. Speaking of living to fight another day, Greg, that music means we are out of time here for the show. But before we go, if the folks are intrigued by all things crypto and vol, and hey, they're listening to a show like this, so what are you doing listening to us for nearly an hour if you're not interested? So if they're interested, Mr. Greg, and they want to learn more, maybe they want to play around with that GUI, maybe they want to escalate to some higher level analytics, where should they go? What should they do?
Yeah, you can go to pro.amberdata.io and play with all the analytics. And then you could check out our newsletter at amberdataderivatives.substack.com.
I definitely recommend checking out the newsletter. I plugged it here many times on the show. A lot of great insights in between the appearances here on the show. That's going to do it for us on the Crypto Rundown this week. Not done on the network, though. We'll be back after the closing bell to break down yet another wild day of action in the options market. What's going to make the list? Well, you got to tune in to the Hot Options Report to find out. Then back again with our usual array of content throughout the week till we're back again next Monday. Another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amberdata. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amberdata delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amberdata eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com. or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.